Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this Friday afternoon. Markets at the day's lows dragged down by banking and metal stocks.
Bond yields shoot up after the MPC minutes indicate shift to a more hawkish stance. Rupee hits a 13-month low.
TCS is the top Nifty gainer after it reported its highest dollar revenue growth in 14 quarters, becomes the first Indian company to cross 6.5 lakh crore market cap.
The government proposes death penalty for sexual offences against children.
And TDP chief and Andhra Pradesh Chief Minister Chandrababu Naidu does not rule out a tie-up with the Congress ahead of the 2019 elections. That's a Bloomberg Quint exclusive.
Weekday for the markets led largely by bank stocks and metal stocks that have been taking it on the chin. Yatin is here to take a closer look. Yatin.
Well, Harsha, clearly banks and metals, these are the two sectors which are taking the hit. But if you look at the overall technology pack, be it large cap IT or small cap IT, everything is doing well. In fact, as Zira was mentioning, 6.5 lakh crore market capitalization for TCS. Of course, it has come off a bit from there, but 6.5% for TCS, HCL Tech, Infosys. In fact, top 5 Nifty gainers, all are technology stocks at this point in time. On the flip side, metals, banks, weakness, but also we have oil marketing companies. Select of them have hit a 52-week low. In fact, HPCL, as we speak, is trading at a fresh 52-week low. Yes Bank, Tata Steel, Reliance Industries, all of them are top losers on the Nifty at this point in time. Of course, we have the mid-cap IT stocks also doing well. So we have the likes of Mindtree, KPIT, Hexaware, Oracle Financial, all of these stocks doing well in trade. Apart from that, in the future and options space, we have stocks like Max Financial, MRPL, Indigo after the strong aviation data, and Fortis after we had a fifth suitor coming in for them. So, all of these stocks are doing well. Wockhardt is another pharma stock which is doing well. So, on a broad basis, technology and mid-cap stocks are gaining in trade, but we have the likes of banking as well as metals slightly weaker in trade.
Yatin, thank you for that. That's the markets for you. CLSA is not convinced that Indian equities will outperform its peers in the first half of 2018. But in the long term, the brokerage house likes India best among Asian markets. Greed and fear also raises concerns on the rupee. Says near-term risks to the currency are rising and that the rupee is not very cheap on a real effective exchange rate basis. Two other issues the report addresses are the fisc and non-performing assets. According to CLSA, a fiscal deficit of 3.3% hardly suggests fiscal laxity. Its concerns lie over asset quality of Indian banks. CLSA fears that the new stressed asset framework put out by the RBI could further put pressure on the system.
All right, speaking about the Indian rupee, it weakened past the 66 against the dollar mark on Friday. The rupee has been amongst the worst performers so far this year in the Asian currency segment. But there are real fundamental reasons for the currency to slide. That reason being a widening current account deficit and slowing portfolio flows, which could lead to a deterioration in the balance of payments. Of course, the scenario in the bond markets isn't helping either. Let's talk about that. Joining us on the phone line is Rohit Garg, Emerging Asia Fixed Income and Forex Strategist at Bank of America Merrill Lynch. He's joining us on the phone line. Rohit, good afternoon. Thanks so much for taking our call. Rohit, I think the point you make is, absolutely what the market needs to understand right now, that you've got a deteriorating current account deficit, which may not be a one-quarter thing given the way oil is moving, and then you have slowing portfolio flows. So your balance of payments situation is changing. The currency should adjust to that.
Yeah, that's right, actually. So I think the key thing to actually understand over here is that it's not just oil. So, of course, India is one of the most negatively impacted in the region when it actually comes to higher oil prices. But then if you look at the current account right now, it's not just getting impacted to oil. If you take out oil as well as gold from the trade balance as such, even if you take out these two elements, you actually see that the trade deficit has actually been widening. So that's one of the key factors that we actually need to understand, that it's not just oil that's actually causing this. And then, of course, what happens is once you have the currency starting to weaken, it automatically has some sort of a cascading impact on portfolio flows. So if you actually see this year, in the last 1 or 2 weeks, INR's total returns for this particular year has actually turned negative. And generally what we observed in the past is whenever it actually turns negative, it does cause portfolio outflows because then the investors are not really gaining anything from the currency. So of course, once you start having portfolio outflows, then it has again, some sort of a cascading impact. So that's what we are actually seeing.
Okay. Rohit, the other development that happened, and I don't know how material this is to the market, is the inclusion of India in the supposed currency manipulators list. Is that a matter of concern at all?
We don't think that's really a concern, to be very honest, because if you actually, see, there are like three criteria that the Department of Treasury really has before it actually puts any particular country in a box. Out of that, of course, the Department of Treasury has actually flagged two reasons. But the third and the biggest reason is really if you actually see the current account situation in India, for any particular country to be actually to be boxed in that currency manipulation criteria, that particular third criteria needs to be ticked, which is basically if a country is actually running more than 2% of its GDP as a current account surplus, then of course it gets boxed. But if you actually look at India, of course it's running a current account deficit, and we don't think it's going to run any surplus anytime soon. So in that sense, we don't really think that's going to be a matter of concern.
Irrespective of that, Rohit, I mean, if the rupee continues to depreciate, would you expect the Reserve Bank to stay hands-off on that depreciating bout? Partly because the real has been, I know it's corrected a little bit, but it has been higher than what it has been traditionally.
Right. So I think we really need to understand over here as to how the Reserve Bank actually functions. So of course, in general, pretty much every central bank, it does try to actually cap volatility in its currency markets. So in that sense, when the currency actually moves one way or the other, it does try to actually slow down the movements. But what we need to understand really is that why the currency is actually weakening. If the weakness in currency really comes from portfolio flows, then of course what we've actually generally seen is not just India, but even other central banks like Bank Indonesia or even Bank of Thailand generally trying to limit their currency movements, because these are not really the real flows, these are just portfolio flows, which sometimes tend to be fleeting. But then if the main driver of the currency weakness actually comes from current account, then generally central banks are more amenable to actually let their currencies adjust on their own, because they do know that it's actually futile to actually resist that. And in fact, theoretically, of course, currency adjustment is an automatic factor that actually then adjusts the current account.
What then would be a near-term target for the rupee at this juncture? Because, the way the rupee has yo-yoed vis-a-vis the dollar from the beginning of the year, it's a tough one to call, isn't it?
I agree. Until last year, I would actually say that, rupee was one of the favorites of the market, what used to be considered as one of the darling of the market. But the problem is, and this is something that has been a bit unexpected, is a tremendous rise in oil prices. So this is something that has been something absolutely unexpected. Now, of course, there are actually some that think that oil prices actually continue to go higher, including ourselves. So, for example, we are expecting oil prices to go up till $80 per barrel for Brent up until June end. So, of course, if that actually happens, then rupee will actually continue to weaken. Now, it also really depends on what, in general, dollar does. Now, we as Bank of America, we are a big dollar house, a big dollar bull house. In that sense, we are still expecting dollar to actually rally. So, if, of course, these two factors come together, then we are definitely looking at rupee actually, weakening substantially against dollars over here.
Rohit, how does the Indian interest rate scenario play out into this as well? I mean, today we saw yields move to, I think, 778 intraday after the MPC minutes. Oil prices plus the fact that a weakening currency will again feed into inflation issues. It looks like foreign investors are not sort of rushing to buy Indian bonds at this point in time. I think March was negative, April has been negative as well so far.
Right. So this has been, something concerning. So what really, is confusing absolutely to us and to me personally as well is this massive disconnect between the minutes as well as the policy statement. So if you actually read the minutes, clearly MPC members have turned a bit more hawkish, but clearly the policy document doesn't really reflect that. The policy statement, on the other hand, has actually gone the other way in trying to lower this inflation forecast for the second half of the fiscal year. So this to me is really concerning, and I guess the market's also getting concerned over here because it does seem to be some sort of a lack of communication between the RBI and the market. That what are they really trying to say? Are they really trying to say that there are upside risks but they still want to sound balanced, or what really is the real deal? So that's why given that the market's actually questioning how they're communicating, given that I do think that there's also a bit of concern whether the RBI will really follow the inflation targeting framework or not. That's why we are really seeing this weakness in currencies. Now, the need of the hour is actually for RBI to actually come out and just put down their hands and say, you know what, this is what we got to do. We got to protect the inflation targeting framework, and we will do what's necessary. So if that actually happens, then I do think that will alleviate lots of concerns as far as the market is concerned. So.
The issue of PSU banks, we have that chart from your report up on our screen. They're still also sort of reluctant buyers.
Yes, I mean that's something that has been very concerning over the last few months, and it's quite clear that now in the last few months the PSU banks have actually got hit from various fronts. Not only they've actually had substantial investment losses, but of course on the top of that they've also been asked to make lots of provisions as far as accelerated NPA recognition is concerned and everything. So overall, it's quite clear that the PSU banks are actually rushing towards a process in which all they need to do is just hold the minimum required as far as bonds are concerned. Now, if you actually haven't seen the recent numbers, but about a month or back, if you actually see what sort of holdings PSU banks actually had in terms of the NDTL as a percentage of NDTL, we are still talking about like 27 to 28%, and the minimum required for them, taking into account the SLR as well as the LCR, the liquidity coverage ratio, is really 25 to 26%. So in that sense, they still have sufficient amount of bonds that they actually need to sell. And again, because it's been an absolutely buyer's strike as far as the PSU banks are concerned, that's again feeding into the negative sentiment for the bonds.
Rohit, we'll leave it there. Thank you so much indeed for joining us with your perspective. Rohit Garg from Bank of America, Merrill Lynch in Singapore, talking about what's happening in the bond markets. Back home, the race for Fortis Healthcare just took a new turn. There's a new bidder. There's also all the binding bids are also being referred to a committee. What's interesting though is another bidder has entered into the fray with a non-binding bid. Yatin is standing by to give us a sense of what really is going on in this race for Fortis.
Well, Harsha will talk about the board meeting outcome yesterday. So the board has decided that they will only evaluate the binding bids. So that is more important, because the 5 bids that we are talking about, or the 5 interested parties that we are talking about, only 2 of them have given binding offers. One is, of course, the Manipal TPG consortium, and also the second binding offer comes in from the Munjal and Burman family office. More importantly, the board also said that they will be they have constituted a more important independent committee, and this constituted committee will be looking after the evaluation of the binding offers. Of course, they also, apart from the committee, have appointed Standard Chartered as an investment banker who will be advising the committee. We also have one more board appointment which has happened. Mr. Basin, who was the former CEO of PwC, comes in with his expertise, and we also have Revanuka Ramanathan, which is more importantly in the committee which will evaluate all the binding offers. Also, we had a Radiant Life, which is a KKR-backed healthcare major, which is looking at Fortis Healthcare currently in terms of the transaction. They have offered the highest valuation so far, which is close to 165 rupees per share. Of course, this is again a complex transaction in which they are looking to demerge the hospital business into a separate entity, which is valued at close to 126 rupees, and the SRL business is valued at close to 39 rupees per share. And they also plan to hive off SRL and buy a significant stake there as well. So a couple of changes which are happening very rapidly for Fortis Healthcare, but more importantly, the board has only decided to evaluate the binding offers, which are currently only given by Manipal as well as the Burman and Munjal family office.
All right, Yatin, thanks so much for that. Meantime, the 2 IT heavyweights have come out with their 4th quarter numbers. While Infosys managed to meet estimates, TCS may have taken it a notch higher by growing across regions and verticals. But will the trend continue through this financial year? Agam Vakil is here with his analysis. Agam.
Well, Ira, it's very apparent from the numbers that TCS has certainly done much better in comparison to Infosys. And let me take you through the numbers too. Starting off with your revenues growth in dollar terms or constant currency, TCS has done much better in comparison to Infosys. And when it comes to the digital revenue contribution, that's largely head-to-head. Infosys just may have a little bit of an edge there. But coming down to margins, while Infosys has seen an expansion in margins on a quarter-on-quarter and a year-on-year basis, it's TCS which enjoys higher margins. And TCS also has an edge when it comes to the outlook, when it comes to FY19. And it maintains its targeted range of around 26 to 28%. On the other hand, TCS, or rather Infosys, has cut its margins range now down to as much as 22 to 24%. Coming down to verticals, among the key verticals, financial services, which contribute as much as 30 to 35% of revenues for both the companies, it's TCS which has garnered a higher growth as compared to something like an Infosys. And it's the same for the manufacturing as well as the retail vertical, where TCS has done much better than Infosys. Even in terms of geographies, when it comes to North America as well as Europe, and both these geographies taken together contribute 80% to the overall revenues. Subdued growth for both companies in North America, but the real reason behind TCS's earnings growth in this quarter is the strength that we've seen in Europe. United Kingdom looking at a 6.3% growth, and continental Europe looking at 4.5% growth on constant currency terms. That said, it's not hard to find out why TCS has higher price to earnings for FY20. But the analyst ratings, surprisingly, are much lower in comparison to Infosys. And while TCS is looking at a return potential of negative 4%, Infosys is looking at an upward potential of as much as 9%. So that remains, I would say perplexing. But that said, TCS has certainly had a very, very good quarter, much better than that of Infosys. But, to tell us more about how the quarter has been for TCS and what we can expect in FY19, here's the management explaining to us what's in store for the upcoming financial year.
If it was to be 6% as the new normal, it would be a very boring job. So we are committed to going on the 10% trajectory. In Q3, we were around 6. Q4, our year-on-year constant currency growth is 7.2. As I said, the dollar growth is 11.7. We are committed to try and get it up to that double-digit growth, and that's where the entire focus is. Capital allocation, we have always said that we've been, if you look at our history, we've always believed that about 80 to 100% should be the distribution. This year, that is, it depends on whether you look at it as a financial year or a calendar year. We have distributed 100%. We generated free cash flow of about 26,500 crores. Between dividend and share buyback, we have distributed about 26,500 crores. We expect a similar kind of 100% distribution going forward also.
If you look at last year, we have been in that range of around 25%. Our aspiration is to do higher than that. With regard to investments to be making into digital, we have been, in the last 3 to 4 years, we have been making those, and we'll continue to make those. And whatever the stability, etc., you have seen in the margins is on the back of some of those investments. So we don't see anything extraordinary about that.
I would say incrementally, we are now more confident about BFS North America than we have been in the recent past, though the revenues have still not started flowing in. Okay. But early client discussions show that there is not much of stress left in the system. And we hope that that will translate into better spend through the course of this year. Okay. But I think Q2 will be a good quarter, or Q1, our financial Q1 and their calendar Q2 will be a good quarter to validate that.
Rajesh Gopinathan, management of TCS, talking about their numbers. Indiabulls Housing Finance, meanwhile, will report numbers today. Analysts are factoring in a pricing increase of about 21% growth in profit. Shraddha is standing by to tell us why.
Well, yes, so, that's the kind of growth number, 20% plus on the bottom line that Indiabulls Housing Finance has seen over the past multiple quarters. So that trend is expected to continue in this quarter as well. A growth of 21%, like you said, to 1,018 crores. That's what the analysts' consensus is. Interest rate spreads this quarter are expected to remain stable because on one hand, while you have a rising share of lower yielding core home loans, on the other hand, that is expected to get compensated by continued benefits from the recent upgrade, credit rating upgrade from CRISIL. So home loans, interest rate loans, should continue to remain within that 300 to 325 basis points that was guided by the management. Loan growth again expected to remain strong, should come in within the 28 to 30% sort of a band that we have continued to see for multiple quarters, and of course that's expected to be largely driven by growth in the core home loan portfolio, even as the share of corporate mortgages comes down. Asset quality, no concerns here really. The gross NPA number in the last quarter had come in at 0.77%, which was at a 5-year low. So that number is expected to remain steady in this quarter. Sequentially, however, the numbers may not really look very great, because remember in the last quarter, that's the October to December quarter, they had sold 10% stake in Oaknote, the bank, and they booked a profit of about 543 crores, and they'd also made a special one-off provision of 180 crores. So broadly, it's the movement in incremental spreads, and any trends or change in trends in asset quality is what is going to be important to watch out for.
All right, thanks so much for that, Shraddha. 8 Future Group companies are listed, but only 3 are widely tracked by at least 7 analysts or more. What's common among these 3 firms is the fact that no analyst has put a sell call on any of these stocks since the Future Group was split into different listed entities. Somit Sarkar is here to tell us what could have prompted on analysts to do so. Somit.
So of these 8 companies, only 3 are tracked. So let's see how what is the analyst take for that. Now, for Future Retail, there are 11 analysts tracking the company, and 10 of them have a buy rating on the stock, while 1 has a hold rating. And the 12-month target price is close to 662 rupees, which suggests a return potential of 9%. And this is after the stock has given around 100% returns in the last 12 months. For Future Consumer, only 7 analysts track the stock. 6 of them have a buy rating, 1 has a hold rating. The 12-month target price is 79 rupees, which suggests a return potential of 33%. Then this is after the stock has given 75% returns in the last 12 months. And for Future Lifestyle, 8 analysts track the stock. All of them have a buy rating. The 12-month target price is at 495, which suggests a return potential of 13%. And in the last 12 months, the stock has given a return of close to 53%. So let's see why analysts are bullish about these 3 companies. For Future Retail, Future Retail has plans to expand its small store format, that is Easy Day, over the next 4 years. It plans to take the Easy Day stores count to around 5,000 stores by financial year 2022. And this aggressive expansion plan will be the major growth driver for the company. On the same store sales growth side, if you see for its flagship store, that is Big Bazaar, the same store sales growth has been good. For the last 4 years, it has been in double digit, and going forward, that is over FY18 to FY20, analysts are expecting this to be around 12 to 14%. So the double digit same store sales growth is expected from this company going forward also. And if you see, the company has now recently acquired Hypercity. Now currently Hypercity is loss making, but analysts expect the Hypercity stores to turn around by financial year 2020, thereby aiding Future Retail's performance. Now, the 2 risks involved with Future Retail, one is if they are not able to turn around their low margin business, and second is if they are not able to manage this aggressive expansion plan that the company has. Now, for Future Consumer, analysts derive confidence from the massive retail store strength that Future Retail has. Future Consumer generates nearly 80% of its revenue by selling its product to Future Retail. And along with this, the company also follows a prudent pricing strategy. The company's ad expense as a percentage of revenue is very small when compared to peers, which not only gives them a higher margin but also allows them to offer more discount to customers. And because of this higher margin, the company is expected to report profit for the very first time in financial year 2019. As you can see, right from FY13 to FY17, the company has been reporting losses, and in financial year 2018 also the company is expected to report loss. So the company is expected to turn around on a bottom line basis in FY19. Now the risk involved with Future Consumer is their over dependence on Future Retail. As I said, 80% of the revenue comes in from Future Retail. So any slowdown that we see in Future Retail will indirectly impact Future Consumer. Now, if you see for Future Lifestyle, now Future Lifestyle has seen steady expansion across segments in both its stores, that is Central and Brand Factory. And because of that, the company has also seen steady growth in the same store sales growth for both the stores, that is Brand Factory and Central. Now, for last 2 years, the same store sales growth has been in double digit for both its stores. And going forward also, analysts are expecting it to be in double digit on the back of steady expansion, right product mix and better inventory management. Now, if you see, the company has around 60 brand factory stores, and the company has planned to expand it to around 120 stores by FY21. And why are they doing this? Because the company Brand Factory stores has not only a monopolistic status but also can achieve quick break-even, and on the back of that they have this aggressive expansion plan when it comes to Brand Factory. Lastly, the company has around 30 power brands, of which they have identified 6 power brands and 1 is an emerging power brands, and analysts believe that these power brands will drive future growth for the company and also will help the company fetch higher margins. However, on the flip side, any growth impact of these power brands will impact the company's growth rate going forward.
So this bullishness that analysts seem to have, is this restricted only to Future Group, or is it, does it for the entire sector as a whole?
So if you see company-wise for Future Retail, its nearest competitor is Avenue Supermarts, that is D-Mart. Now on this, analysts are divided. 50% of analysts have a sell rating, and that is mainly because of the higher valuations that Avenue Supermart has, and not because of the growth, future limited growth that the company gives, but it's only because of the analysts, because of the demanding valuations of the company. For the other company, that is Future Consumer, now only 7 analysts track this company. Now it is very small when compared to its peers like Hindustan Liver, Dabur, Marico, Britannia and Nestle, but none of them still now has a sell rating on Future Consumer. Lastly, for Future Lifestyle, all the analysts seem to be bullish about the sector. For Aditya Birla Fashion, if you see, all of them have a buy rating. For Shoppers Stop, none of them have a sell rating, and also for Westside, that is Trent, none of them have a sell rating.
All right, Soumya, thanks so much for that. The government has proposed the death penalty for sexual offenders against children. Additional Solicitor General P.S. Narasimhan made a written submission to the Supreme Court today, which said that the government has started the process of amending the Protection of Children for Sexual Offences Act to ensure capital punishment in cases of rape of children below 12 years of age.
Politics. Chandrababu Naidu does not want to rule out any future political alliance just yet. The TDP party president and Andhra Pradesh chief minister says development and politics are intertwined, and the only reason why he quit the NDA was because the BJP went back on its promise of providing special status to Andhra Pradesh. Speaking to Tamanna, he says his vision is to create a better version of Cyberabad he helped build just outside Hyderabad.
I wanted to produce a good model for the country. Earlier, I created Cyberabad city. Everywhere, all over the world, people are accepting that is the best model. Yes. If you see in India, nowhere that type of infrastructure what I have created in Hyderabad. Either Greenfield Airport, Outer Ring Road, Cyberabad city, you name any infrastructure for that, but water, power.
True, sir, but let me just...
Here also, I want to create a good model for the country or the global scenario. I am working for that. In that, politics, as you rightly mentioned, politics also will have a say. We cannot separate politics and also development. How to do, what to do, this is not the time to talk. I am totally busy in demanding special status and other bifurcation.
I understood that, sir. But I would still persist and ask you, what is your view on the national scenario and national political picture we see today? We are seeing a more strident Congress party emerge. But do you think that there is a potential for the Congress, backed by other regional parties, to pose a challenge to the BJP? Or is it going to be the other way around? A host of regional parties backed by the Congress?
No, always what I'm saying, these are all the ifs and buts in politics we cannot answer. How it is going to change the situation, it all depends upon the people's mood, how they are going to support everything. Narendra Modi ji expected to win absolute majority last election. Within 4 years' time, this type of reactions among public. What I'm saying, these are all how you are going to conduct yourself. How we are going to perform, that is important. Why we are all in politics? Great nation. But at the same time, we have to serve utmost efficient. India is having all advantages. But we have to provide proper leadership, then things will happen. That is where today.
So where do you see that leadership coming from in 2019?
What I'm saying, sometimes how things are going to happen, situation will create.
Sir, that may be true, but you have the same set of leaders. No new leaders are going to jump into the fray in the next few months.
No, what I'm saying, few months, yeah, you may be right. Even countries, companies or families have been built by leaders. Not automatically it will happen. But India, yes, you're right. There are some problems. We will emerge. Our situation will create. And how we are going to take this country forward, it is a matter of time.
Okay, I think I'm just going to make a couple of more attempts and ask very straight questions. Do you think the Congress led by Rahul Gandhi is going to be able to give the BJP led by Narendra Modi a tough fight in 2019?
No, what I am saying, I don't want to answer all these questions. How things are going to happen, how politics is going to change.
Okay.
All these things I don't want to answer.
All right, okay.
My answer is very clear. I am requesting my people also to give me 25 seats. Both in Delhi, they have done injustice. Better way, we must have a say in Delhi, then only they will listen. And with all my experience, I am interested in nation building, at the same time preparing a good model that is Andhra Pradesh. This is my concern.
You know, because you spoke about the 25 seats in Delhi, I just want to have your reaction to one point which came politically from the Bharatiya Janata Party after the separation, which was that this is an advantage for them in Andhra Pradesh. Now that you all are separate, this will help them to grow. Do you think that that is a scenario?
You know, the situation, 125 years Congress party, after bifurcation, moved the Bifurcation Act with some provisions. They have passed that bill. And also in the Rajya Sabha, all political parties demanded injustice has been done to Andhra Pradesh. Yes. Now we have to do something. Then special status they announced. After doing all these things, 10 years they were in state politics in power and also Delhi in power. How many votes they got? Nowhere they got deposits. People didn't excuse them. They punished. Today, you are not implementing that Bifurcation Act. And also you are not implementing that special status. How can you accept one seat or one vote? I am asking. Even they gave that assurance, they passed that bill, even then they punished. Today, that bill and also that status you are not giving. How can you expect votes in Andhra Pradesh?
Do you see any scenario, sir, in 2019 or after the next general election of the Telugu Desam Party being part of a coalition led by the Congress? Is there a possible scenario of that happening?
No, you know, around 96, I created United Front. I took support of Congress at that time.
So you think that's the more likely scenario?
No, I'm not talking all these things today.
Okay.
Again, I'm not talking.
Okay.
All right, and you can catch that entire conversation at 8:30 p.m. tonight here on Bloomberg Quint. The Congress party has moved an impeachment motion against the Chief Justice of India, Deepak Mishra. That's news just coming in. The party submitted the motion to the Vice President today. Senior Congress leader Ghulam Nabi Azad said 71 members of Parliament from 7 political parties have signed the petition.
We wrap it up on Power Lunch today. Up next is a special conversation on the competitive bidding for Fortis and finding a fair price for the company. That's coming up in a moment.